Good evening. My name is Kathy Behrend, and I have the great opportunity and privilege to be a longtime board member of the 92nd Street YMHA. Our program tonight comes from the virtual stage of the Y, located in New York City at 92nd Street and Lexington Avenue. Impact investing and climate change is the third and final part of our three-part series. Working in partnership with Fiduciary Trust International, the Y is excited to produce an event on this timely and critical topic. Climate change increasingly becomes more urgent and demands our attention and actions as human beings, as citizens, and as investors. How about considering climate change as a verb rather than as a noun? The 92nd Street Y, founded in 1874, continues in its very mission and its many activities to attune itself to, quote, repairing the world, unquote. Dealing with climate crisis is now literally repairing our Earth. I recently read a Native American proverb that is pertinent to our conversation. We do not inherit the earth from our ancestors, we borrow it from our children. Despite our ongoing explorations into space, there is no planet B. There is no plan B. Our impact investing conversations have tried to invest how investors can do good and do well. I would like to now introduce Kate Huntington, a managing director at Fiduciary Trust International and the leader of its advisory solutions group. Formerly at Athena Capital for 15 years, Kate joined Fiduciary when the firms merged last year. Kate brings tremendous expertise in both private market sector as well as in impact and sustainable investing. Kate, I turn it over to you.
Thank you, Kathy, and good evening, everyone. I'm delighted to welcome you to the third and final webinar in a series of impact investing events that we are presenting with the 92nd Street Y. Fiduciary Trust and the 92nd Street Y are two organizations that really share similar values. We're focused on driving meaningful conversations that strengthen our communities. This is something that we believe is important now more than ever. As far as background, Fiduciary Trust is a wealth management firm founded in New York City in 1931 by families for families. We provide wealth planning, investment management, investment advisory, sustainable investing, trust, estate, philanthropic, and family office services that all work together. And this all allows us to provide customized advice based on our client's complete picture. As Kathy said, about a year ago, Fiduciary acquired Athena Capital Advisors, a leader in the impact investing field. And we have now merged forces. Our dedicated sustainable investing team guides individuals and institutions in a process to integrate their social and environmental values across their portfolios. And tonight, I have the pleasure of introducing Howard Fisher. He is the co-founder and the chief evangelist of Gratitude Railroad, a well-regarded impact investment community. Gratitude Railroad was formed in 2013 to transform traditional capitalism into a force for solving critical environmental and social problems. Howard, as you will soon see, is a very thoughtful and dynamic individual, someone that our team has had the privilege to get to know over the years as we have grown our impact practice and shared ideas. So with that, I'm excited to turn it over to Howard. Thank you for leading our discussion on this very important topic tonight.
Wow. Thank you, Kate. That was really quite an introduction. I appreciate it very much. I don't need to say anything more about Gratitude Railroad, just to repeat the idea that we believe that capitalism is a force that can be harnessed for the good and to solve most of the problems facing mankind today. So I'm really pleased to have this conversation with my three co-panelists, each of whom take a different tack on the world of investing and addressing climate change. So I guess I will introduce them in any order I choose. So Lizette Cooper was a founder of Athena Capital, a leader in impact investing. And with the sale of Athena to Fiduciary Trust last year, she has the incredible opportunity to bring impact investing to many, many people. And I think it's really important that we continue to bring this to people all over. It's a process that everybody can be involved in. Tenzin Seldin, who has been involved in climate work for quite some time, both on the philanthropic side and the for-profit side, is the co-founder and the CEO of The Plant, which is an amazing project located in the New York City area that's addressing climate change. It's a convening place, and importantly, developing processes and theories for buildings to be retrofitted and rehabilitated in a manner that supports the climate much better. And then Bola Olusanya is the CIO of the TNC, the Nature Conservancy, one of the largest and most important nature not-for-profits that we have, with significant capital to invest. So we have an advisor, we have an operator, and we have an investor, all on this panel, all sharing their ideas and their thoughts about how we can use investing to address climate change. So maybe we'll just start with one big, broad question for each of you, and you can start the order I guess I introduced you. What are the aspects of climate change, of global warming, that most interest you, and how do you see your work able to address them? Go ahead, Lizette.
Okay. Well, I always knew you were going to mix it up, Howard. You didn't start with the question that you were supposed to start with. So
oh, really?
Really think about it. Yeah. It's like, well, what do we do? The whole, traditional stuff. So, what I'm super interested in are two things. I'm really, really interested in the convergence of traditional investing and the environment, that it's become like the most critical thing that we have to look at in investing right now, that you can't be an investor, a traditional investor focusing on financial risk and return without looking at climate, that you just can't ignore it, that CFA Institute, regular, ordinary investors, it's become de rigueur. It's part of getting the best possible risk-adjusted return in your portfolio. You have to look at the environment. And then the other thing that I'm super interested in is just how can you make a really big difference? How can you, is it through taking chlorofluorocarbons out of the atmosphere? Is it through wind? Is it through solar? Is it through food waste? What is it that we need to do to really slow down the putting greenhouse gases into the atmosphere? How can we save the planet? That's what I'm really interested in, is how do we get the biggest impact?
Yeah, and I think I'll add to that, Lizette, you brought up some really good points in that I think investors nowadays cannot ignore it. And not only that, I think it actually, for me as an operator and founder, I think it's the next path forward for founders who are interested in not just impact, but also sustainable impact. I've seen so many interesting ideas around, for example, even ocean. As the sea level rises, we're going to get about 700 million to 1 billion people who will be displaced in the next 35 years. That to me is, yes, a risk and tragedy, but also an opportunity for founders to be able to work with, groups like TNC and Nature Conservancy and organizations like the UN to see what are solutions that we can work on right now at this moment that will have the long-lasting impact for climate. So I've really seen it from not just the side of investors who care about this issue deeply, but also from founders who typically have never ever worked in climate, and now all of a sudden they care about it because they see it as an opportunity. And I see that there's nothing wrong with that, because this is a really wide gap here that we're trying to fill.
And thanks for the question, Howard. And just to follow up on what Tenzin said, From a TNC perspective, there are two broad themes that we really care about the most. One is obviously climate mitigation, and the other one is increasing biodiversity. But when I wear my investor's hat, what excites me the most is the momentum that we've gotten over the last decade, where you're now getting ESG and impact investment strategies becoming a lot more mainstream, to a point where there's hardly a day that I don't get an email in my mailbox telling me about an exciting strategy for us to take a look at. So the fact that you're getting a lot of volume, a lot of interest, and I think part of that is obviously the change in the new administration that we're getting in the US. So I think that is probably the most exciting thing that I'm seeing in the impact space.
Well, Lizette, with apologies that I'm going to continue to sort of just free form, but it's going to be another question similar to what we discussed, and touching on what Tenzin said. We talk about in our community authenticity. So Tenzin says all these entrepreneurs are coming to it because it's cool, right? And Bola just said all these emails are coming to him because ESG is now a thing. And the question is, what is it? When is it real? When is it marketing? When is it going to make a difference? And how do you put that into practice in your work?
Yeah, no, that's a fantastic question, because we apply a really strict assessment to that, because we think of impact investing within the broad umbrella of sustainable investing. So, it's one thing to look at, eliminating investments, just screening out investments that you don't want to have in your portfolio, or but investing for impact is really investing with the intent to have both a financial return and a social return and environmental return. It's really the intention, the idea that you're going to measure that impact. So what we do is that we use the Impact Measurement Project framework. So we look at 5 dimensions to see whether it's really authentic impact. What's the outcome? Who is the outcome affecting? What's the size of the impact? And what does that project actually contribute to the outcome? We want to know what the risk is to that success. So, like a great authentic impact, you need to look at all of those things. Are you really getting the impact? Is it really, greenwashing, not just sustainable, not just aligned with your values, but you really have that intent. So a great, authentic impact investment might be something like, community solar, so that a lot of people can't put solar on their rooftop, but how do they get access to solar? So to be able to have solar in a field in a community, or to be able to put solar in a university for a group of people, or for a company to put solar on their rooftop as a collective, so that a lot of people in a community can get access to solar, and to provide, green jobs to be able to put that solar installation up in the community. And that provides also more flexibility. And on the other hand, what's really not authentic would be, what would be an example of something that's not authentic impact or greenwashing would be putting a solar panel on an oil rig.
Isn't that just a little bit better?
Yeah. So that's not too good. You're not helping too much with the carbon footprint there.
Yeah. Do you either Bola or Tenzin, do you have a comment on the authenticity angle of the impact investment opportunities?
I can go first. I think Lynette is right that there's a lot of greenwashing that exists today, and it's not surprising given the fact that, like I said, there's that movement, there's a momentum, and so you see a lot of people that are not as authentic. But the lens that we look at it from an investor perspective is that we have a multi-billion-dollar endowment where our goal is to generate long-term returns that will beat markets as well as inflation, right? And we try to segment the types of impact investment or ESG investment that we look at into 5 different categories. So there are the simple ones where all they're doing is trying to exclude certain securities from their portfolio. we take that with a grain of salt because we don't think that that is the best approach. But we take a look at some of those. I think so. If you're thinking about being sincere, that will probably be the list of it, right? And then you have a few investment managers where what they do is they strongly believe in it and they've integrated ESG and impact and all that measuring outcomes into the investment process. So it's not just doing it for the good piece, but they're also looking at it from a return standpoint. So we spend a lot of time vetting those type of managers. The third segment will be managers that take a step further, say, we invest in these companies, but we're also going to engage with them with the hope that we can help, accelerate their migration to renewable energy. So that's another group of managers we spend a lot of time looking at. The fourth one will be on the private side, just looking at impact investment that are market rates, right? There's several of them that we're seeing, and we're measuring what their intentions are or what's the materiality of the investment that they're making. And so then the final one will be where we are not looking specifically at the long-term returns per se. So we're taking that concessionary view where, okay, if TNC is not involved in this particular investment, we may not be able to catalyze capital into that. And so because of that, the concessionary type of investments, what we've done at TNC about a decade ago or so, we launched an impact investment team internally that's there exclusively to source investment ideas using science-based solutions and catalyze capital from the institutional investor world as well as wealthy families. So that's the spectrum we try to look at things. And once we do things along those lines, we're able to sift out the guys that are really serious about things or the guys that are just, to ride the wave.
And if I can add to that about what Bola said, I think investors carry so much weight that when you're a founder, you listen to what your investors say. And I found that sometimes a lot of investors will say they care about the impact and the social returns, but they're not as scrupulous on the impact returns as they are on the financial return. It seems uneven. Like the financial return, you'll get like 4 analysts working day and night to test, and yet on the impact return, it's like, oh yeah, that sounds good. So I think that there's a way here that I do think there's an opportunity to bridge where investors can, as Bola said, can be a little bit more scrupulous and have more diligence in pushing forward companies to test out which one is sincere or authentic, as you call it, Howard, or not, and then see which one really can make the test.
Okay, you touched on something interesting, Bola, which was our question I was forming, is that we as an impact investors talk about, at least from my perspective, non-concessionary returns. Yet we have a climate crisis. We need work from the government, from policy. We need charities, not-for-profits, such as the Nation Conservancy, and we need entities like Fiduciary Trust to move massive amounts of capital into the space. When I talk about it with a lot of people, they say, well, impact investing for the climate, you're not really going to make that much money. You're going to give up returns for the social aspects, right, that Tenzin mentioned. How do you address that? And is it necessary to get, let's say, competitive market returns? And if not, how do we address that? Anybody can go.
So I would say that it's absolutely critical most of the time to get market rate returns, because that's where we get scale, because this is a huge global problem. And that if we get market rate returns, then we have something that is itself sustainable. And that I think we've actually gotten to a place in the market right now where very, very many impact investments are at scale and are sustainable. So if we look at just public market indices, if you compare ESG sustainable indices over the last year, over the last few years to non-sustainable indices, they've outperformed. And that I think is starting to wake people up. If you look at fossil fuels, they are in secular decline. If you look at the Paris Agreement, there is no way that that they are not dinosaurs. We have caps on emissions on a global basis that we just, there's going to be a change. We are going to have clean energy. We are going to have clean power. Things have to change, and there are whole new industries that are going to evolve, and the ones that are going to make people a lot of money. There are going to be new, interesting innovations, especially in private equity, private investments. We are in a market environment where, very high valuations in public equities. We're in a pretty low return environment going forward. Maybe 5-7%. We're at a 22% multiple on the equity market right now. But in private equity and whole new areas of possibility to make money off of climate change, there is a huge opportunity to do well and do good. And yet we also need flexible capital. We need people to be altruistic. We need everybody to get together and look at their own carbon footprint and volunteer to offset, their own carbon footprint. If we all did that, every single person, it wouldn't cost us each very much money. If we were altruistic like that together, we would solve the problem really quickly.
Yeah.
So it's both and.
I think the market regulates itself, Howard. I'm not worried about that at all. In fact, I would actually make the prediction that the next 30, 40 years of entrepreneurs that are going to become, billionaires and also produce the level of capital in their company are going to be mostly climate based. It's when Goldman Sachs rebranded itself as a tech company a few years ago that, yes, to some people that's comical, but there was a reason why. It's because that's where the money was. Similar to that, I recently was having a conversation with an executive at Shell, and they were saying that they're really now moving towards renewables and looking at renewables as a source of their capital, because they understand it's not just about public view, but also where the money is. That's where the next wave of large income in the market will be driven by that. So I think we don't have to go to the future to see that. We see that in the present right now, where these companies are heading towards, these traditional companies that have been extractive. And what I do right now with the plant and development has, and developers have been the most extractive industry for climate. 40+% of emissions, and every year is by one group of people, and that's developers. So we're now, even with the plant, we're doing it differently. We're trying to make it net negative emissions, so there'll be net positive impact. And by doing that, we are changing this industry one by one. And we're seeing other developers now have contacting us saying, okay, how are you doing that? Tell us, so that, because this is probably the next wave of development. So every industry now, I think, is seeing that bifurcation and is seeing that tension.
Yeah, and just to echo what my other panelists have said, I think long term, it is important for the impact investments that we make to be market rate or above market rate. I think it's important, and that helps to bring other people to invest. But we're not going to get there immediately. That's the truth. I think that there needs to be that coexistence of the market rate investment and the concessionary investments. And from TNS's perspective, and that's the reason why we have a group at NatureVest that is dedicated to mostly those concessionary deals, where we're trying to help catalyze capital into deals that other people are not going to be looking at, but we can apply our science and find those appropriate solutions that will help reduce greenhouse gas emission. But I would also add that, on the public markets, like Lynette said, my team recently embarked on a small research, just looking at the companies that have the highest greenhouse gas emission. We used true cost data. And we just looked at the last 5 years. Every year we look at the highest direct greenhouse gas emission. And we create a portfolio of that, right? And we compared the return relative to the global equity market. And what we find over the last 5 years, even with 2006, that was a great year for energy stocks and utilities and materials, that over that 5-year period, you're seeing two things happen. One, the universe of high greenhouse gas emission companies actually declining because those companies have not done well. And relative to the broad equity market, those companies as a whole have underperformed by 600 basis points per year. So that tells you that there's that movement to support more sustainable investing, impact investing, both on the public side, and you're also seeing that on the private side.
Yeah, if I might add one more thing to what you said, Bola, is that I think it's super important to have different players in the market, and that as a nonprofit, as a philanthropy that can do PRIs, that can do investments that are related to your mission, that are concessionary investments, that it plays a really important part of the whole ecosystem, that has flexible capital, that it helps get things going, that really are kind of a hybrid that government might not fund, that regular market rate investors might not fund, but it really shows that there's potential for something and gets things going. It's super important.
Wow, those are very interesting answers. So I just want to sort of expand on that a little bit. So what you're witnessing is the market changing, companies doing less well, underperforming, without any of the regulatory changes that maybe some of us want, like a price on carbon. What do you think is the role of a price on carbon, and sort of incorporate into that some of the other things that are out there? Some people talk about nuclear energy, some people talk about direct air capture, some people talk about voluntary carbon markets. How do those fit into this concept of repairing the climate and the work that you're doing? Or not? Or I can answer it. So does anybody think that we need a price on carbon, or do you think the market is self-correcting? Yes, we do. I think we need a price on carbon. I think that it's a very unfair advantage for companies that are not charged for their pollution. I always think about it in the terms of organic food versus inorganic food. Inorganic food is generally much cheaper than organic food because the inorganic food is polluting for all of us and not paying for it, and the organic farmers are working really hard not to harm the environment. So let's go.
Howard, I would ask you, the reason why I haven't nodded yes to that is because it's a very complex and dynamic, nuanced question, because in a lot of developing countries, I'm from India and Tibet, and sometimes you don't have a choice. I mean, you look at what's happening with the farming practices there. Yes, there are devastating impacts to climate, but a lot of times the farmers there don't have a vehicle that is, using carbon capture, for example. So to tax them sometimes may be taxing the global south or the poorest amongst us, so who may not be able to afford the technology that we need to be able to, continue living and having a stable economy. So that's why I'm not quite sure. I think it's a very complex question and answer.
I think that's a really important point you've made. And to some extent, we have this privilege here, or let's say I can say, I have this privilege to make choices like buy organic versus inorganic, right, and to make investments that expect to make a return. So right. Then there's also the question of, if we're looking for market rate return investments, is there a way to invest in the industrial, let's say the emerging market industrial and farming economies that can't afford these things? Can we invest with a market rate return to resolve those problems? And we're exporting our pollution to countries like India and China and Vietnam by allowing them to pollute. Can we solve that problem with impact investing? Another stumper. All right. When we think about this investing too, right? So Lizette has in her core community high net worth investors, very sophisticated investors. The Nature Conservancy has a lot of money, right? It's a big, serious endowment with lots of services, with people like you and a whole team behind you. How do regular people who might just buy ETFs and mutual funds, might trade with E-Trade, how do they make investments that might help the climate?
Yeah, so, I think that they don't have as much access to all of the private investments. They can go to tools like on As You Sow, Invest Your Values, look for different fossil-free funds, and looked at different ETFs, different mutual funds. It's really helpful to have an advisor because it's very confusing. There's so many different kinds of investment vehicles. Active management's great as well. So for a few dollars to a few $100,000, you can look at moneyunder30.com and look at different robo-advisors. They've got 4 robo-advisors for socially responsible investing. But I think when you get a little more money than that, it's really super helpful to have an advisor. because you can, get education, you can get customization. Of course, I'm talking my own book here, but I do think that there is a service there in terms of portfolio construction, really matching up what your particular interests are, what you want to accomplish, and what's available in the marketplace, because there are a lot of different offerings.
Yeah, and I wanted to start by saying don't buy GameStop, right? That's not what you want to do. But on a serious note, though, I agree with Lynette that there are options there. Obviously, the individual investor does not have all the menu of options like a TNC or maybe some of the large university endowments have. But there's still options out there. There are ETFs where they just do screening and exclude maybe carbon-intensive companies from that. So you can go in and look at that. I used to work in wealth management. I worked at Key Private Bank, and we provided some solutions while I was there to some of our clients where we built out an ESG portfolio of public equity securities and managers. And the good news is that those managers have done well. They have done really well. So you don't have to be super sexy looking for the private investment to be able to get exposure to some of these themes that we're talking about.
Yeah, I was also going to say, to add to that, there's a group called Carbon Clean 200, which looks at publicly traded companies that everyday people can look at. Utility companies that have a real focus on climate, and it's not just speaking about climate, but actually doing it and making sure that their carbon emissions are as low as possible to net zero. So I think that's one. And then the second thing, Howard, I would also say is let's go beyond investing. I think it's also about how do you pressure companies, if you're a consumer of a company, to actually move towards what Apple and Amazon have moved towards, which is net zero. They didn't move out of their own volition because they woke up one night and said it was the right thing to do. They did it because their investors and also their consumers cared about it. So there was a lot of pressure driving that. And then the other thing I'd like to say is, my co-founder, Leela Warren, and I were thinking about, as founders, as operators in the climate space, we have been searching for the right banks to get the equity and the debt, right? And sometimes that's a difficult thing. It's how do you really how can you capture the banks that have the right ethos that you believe in, that are completely aligned? So from the founder's perspective, sometimes it's limited for where we can go and seek capital. So that's another issue that I think we're founders and operators also have to face.
Yeah, that's super interesting. There's another way that speaking of pressuring companies, there's another way that even very small investors can pressure companies. And if you own individual companies, that's by voting your proxies, and there's free information available on the ICCR website, and that's the Interfaith Center on Corporate Responsibility. And as far as climate change goes, there are a lot of shareholder resolutions around climate change right now, around lobbying fossil fuel producers to keep them from trying to subvert the Paris Accord, and around banking to keep banks from continuing to provide capital to firms that will drill in the Arctic, that will provide capital to companies to build coal plants or fracking plants. And just really, really interesting, because that was that kind of pressure by shareholders investing in the early days when I was younger for apartheid, to get companies out of South Africa. That pressure, corporate pressure, is really what helped with the fall of apartheid. So you can vote your own proxies. So that's something you can do to help be part of the movement to pressure companies.
Yeah, I just wanted to quickly add to that this whole concept of engagement is very, very powerful. And not just at the proxy level, which is very important, but just using the levers that you have as an institutional investor. There are ways that you can engage with the investment managers that you partner with and have them, engage with those companies, right? And the multiplier effect that exists in that exercise itself is huge. If you think about all the assets that are managed by the asset management industry, $90+ trillion, being able to have that conversation with them. And I have some case studies to share. When I joined TNC about a year ago, there were some managers in our portfolio that were not ESG friendly. And there were some new managers that I was looking at bringing on board that were not necessarily looking at impact on the public side, the hedge fund side. They were not looking at ESG the way we were looking at it. And we started the conversation, the dialogue, like, oh, this is very important to us. If you're going to partner with TNC, you need to, have like an ESG policy. And we're not greenwashing here. We want you to really mean it. And when you start having those conversations with the managers, they recognize that it's important that, one, there's that movement that's happening, but then you're investing with a TNC, you have to do that. And I can tell you that we were very, very successful having those conversations with those managers where they've either adopted ESG policies, they've put in place ways to measure their carbon greenhouse gas emission of the underlying companies. They put it, in some cases, they're engaging with those companies to help them, transition to renewable energy. All those things, and I think that it's just very, very powerful.
Yeah, and I think that's a super good point. And right now, for the average investor, Morningstar puts out a report about how all the big fund companies vote on their proxies, including on climate, and the top 50 fund companies. So you can look it up on Morningstar's website. That's for free. And with lately, Larry Fink came out with, and they've been making a lot of progress. So there's a very, making a lot of statements about what they're going to do about their voting and the pressure they're putting on companies about their climate disclosures, governance, risk, all of that. But historically, BlackRock's voting record on climate has not been very good. So they're saying a lot of good things. But if you look in that Morningstar report,
Right.
and you can see how they've actually voted on climate related, of the top 10 fund companies, which they are the largest one in 2019, they were tied for, place 7 and 8. So we have to see them actually come forward and vote according to what they say their new policies are.
So I think that's all very interesting. And so one of the things I'm thinking about based on those comments is, one, is divestment from these kinds of companies that are offensive, including BlackRock, for your advice, or not investing in, let's call it ExxonMobil, because they're just by definition bad companies? Or is it better to be an activist shareholder and try and force them? But how are you an activist shareholder? And sort of wrap around that. And one of the challenges facing BlackRock is so much of their investing is passively tied to an index and based on contract. They have to own these companies. And as a big company themselves, they tend to vote with management. So how does that impact the way that one would invest?
I think my philosophy is that I can't speak on which one is better, whether someone should be an activist within an organization like a BlackRock and do it, or outside. But I definitely believe, and I've had this conversation with my co-founder about where is our money going to be is important, given that we are a climate forward, climate focused company. Who we bank with is probably one of the most important symbolic, agreements that we can have. And for us, we've decided to divest from JP Morgan and now work with other banks, smaller banks, banks that are focused on climate. So I think that was powerful, because when we do it, when a company or founder does it, then it really gives the doorway for other organizations and founders to also do the same. But there are some within that I've spoken to within these infrastructure and organizations, individuals who truly are working within the system to try to, also get a JP Morgan or try to get a larger bank to actually be more climate focused and have climate friendly policies. But again, it's a balance, Howard, and I don't think you can always do all of it at once. But you can at least gradually do it. And that's the step that we at the plant have decided to take.
Yeah. Does the Nation Conservancy only work with friendly banks and vendors, or is that too hard?
It is tough, right? I see the argument for divestment, right? That's maybe but I think sometimes you lose sight of where you're going, right? People focus on where you are, right? So some of these companies that are the problems, they're going to be part of the solution. And just making blanket statement that you're not going to work for or work with certain companies because of where they are today loses sight of where they're going and how much they're putting into solving this problem. So the way we tend to look at things is it's on a case-by-case basis. We will never make those blanket statements around divestment or doing this. We want to look at the science, the data, and if we have an investment manager that is invested in some of those, carbon-intensive industries, but they're actively working with them, engaging with them to, move towards that reduction of their carbon footprint and even changing their business model. We think that is a positive, and we should not penalize them for doing that. So I think it's a nuanced answer. You can't have, it's going to be a case-by-case situation.
Right. So there's a question in the chat that I'm going to modify a little bit. It's directed to you, Bola, about the 3 top impact investment priorities for the Nature Conservancy in 2021. But I'd like to open it up to everybody in that, if you had the opportunity, we do have the opportunity to direct investments in 2021 that will have the most impact on the most important areas, what would they be? How would you make those investments? And how would that look like? How would you measure the impact?
Well, at TNC, we're actually going through a process right now to come up with what we are going to be doing, not just over this year, but over the next 10 years, right? So that's an ongoing process. I can speak, broadly about where I think we're going to be heading to. And one is obviously the climate mitigation angle, but that's going to take more of a, natural climate solutions perspective, because our science has shown that about 1/3 of the greenhouse gas emission can be reduced by focusing on the natural climate solution. So that is one piece. The other angle that we focus on will be just biodiversity, right? Just increasing biodiversity across the globe. And we're spending time figuring out, using science and data to figure out exactly where across the globe we should be focusing our energy and resources. If you take that to my direct world in terms of from an investment perspective, right? We carved out a portion of the long-term portfolio a few years ago to invest in impact deals, and we've been making those investments, and we're going to continue to do that. I don't have any specific area to say, okay, this is where we should be looking at. I want to look at all the options. It does look like we're leaning from an asset class perspective, that we're leaning towards, more private credit type investment rather than venture capital. But I would also say that we're not closing our books to anything that come in that area.
Got it. Do you have anything to add to that, Lizette? In terms of things
Sure.
that you would push clients into to make them
Sure.
change?
Well, I think it's it's a sort of a dance between demand pull from our clients and the great opportunities that we see in terms of what investment firms present to us. So I think we have a lot of demand from clients around sustainable agriculture, and then we see really interesting opportunities around systems change, around clean transportation and sort of renewable energy and the grid, really just grid flexibility, battery improvements, distributed storage, just really improving all of the infrastructure around technology that's already here. So we see a lot of opportunity there.
Can I also add to that,
Please.
Howard? I think if I was to pick 3 categories, the first would be development, like physical buildings and construction, because it's 40+% of emissions. The second is oceans. I think there is so much opportunity in oceans, whether it's seaweed, creating fabric off of seaweed. I know that Pharrell's company has been doing a lot of work around that. Whether it's the climate refugees, as I mentioned, the sea level rising and the innate amount of problems that will also bring, and also solutions that you can curate. And then the third thing is justice. I think oftentimes in climate investment, it's hard to capture what justice means. But for me, it's about solutions that are simple. Sometimes you don't need the biggest technology that captures carbon. You just need to plant trees and soil, right? That's as effective. And so how can we incorporate indigenous voices and women who are working on the simple solutions? I think they're the ones who we often overlook for these investments, because it may not have the same metrics that we use the tools to be able to gather the information.
I appreciate that very much. I'm also going to sort of take on a question from the chat, which is about microfinancing and helping farmers in developing countries. But I would suspect most of us are familiar with the work of Paul Hawken and the Drawdown Project, and the concept there are many ways that we can get carbon out of the atmosphere that we're beyond the point where just emissions reduction is going to save our lives. And one of the things that always resounded with me from Paul's work is that one of the #1 ways to stop climate change is to educate women, because educated women have, with all due respect to everybody, have smaller families, they go out, they work, they waste less. So how do you think about other things that we should talk about that we haven't touched on that are maybe a little bit more indirect that would solve the climate problem? And to, again, also touching upon what you just said, Tenzin. So as investors, as capitalists, we think about growth. How big is the business going to go? How much is it going to scale? But isn't growth the enemy of climate? So how do you think about non-traditional solutions and growth as an issue?
I love the second series of Drawdown. Have you all read Catherine Wilkinson and John Foley's recent work that they've done for Drawdown, the framework? In it, they described, for the first Drawdown, it was the top 10 problems and solutions, and now it's really the frameworks to look at it. And they say that the non-traditional way to think about climate is not just looking at agnostic industries of here's agriculture, here's farming, here's food, but actually frameworks of collaboration. What are areas that we can collaborate together on? What are areas that we can play a role in storytelling? Because, for oftentimes climate storytelling hasn't been told. As you said, Howard, women are one of the best investments for climate. And yet most countries have not really gotten on that bandwagon. Why is that? Because there's not enough of a collaboration or consensus around that. So for me, I'm really interested in the other areas of Drawdown, which is how do you support people of color who are living the climate experience to also have the climate solutions? Perhaps that their solutions may not be as expensive because they, by nature, have to be more industrious. They, by nature, because they're limited with their resources, they have to think outside the box. How can we support them? So 75% of climate funding right now in philanthropy goes towards energy, and a majority of that is in the global north, not in the global south. So only 15% of philanthropy and investment really goes in the global south. That's where I'm from. And so I've seen some of the most industrious, innovative ideas from India, Pakistan, Afghanistan. They just haven't been able to mature, Howard, and scale because they don't have the right backing and partnerships. So my thing is, how do we go back to basics with climate and actually empower and give money to those who really need it on the ground?
Well, there are really fantastic global investors, so it is important to make sure that those investors who are connected up with those entrepreneurs. So I really hope that your project is the project is a tremendous success, and that it enables those connections to happen because it's tremendously needed.
Yeah, and just following up on what Tenzin said, I think the people aspect of climate change is something that I know we've talked about that a little bit, but it's very, very important. And when I even look at it, my experience growing up in Africa, that's if you think about the poverty that exists, right? You can't tell people to start changing their habits when they're finding it difficult to put food on the table. So I think education is important. Programs to alleviate poverty is really, really important. It's when we get all those things solved, hopefully, that's when we can start addressing the big impact of climate. It's a tough one, but unfortunately, people of color, like Tenja said, are the ones that are likely to feel the impact of the warming of the globe, of the planet. And that's something that we in the US and industrialized world, we need to pay close attention to.
Okay. So another theme from the chat that I'm going to expand a little bit. The question is, where does green infrastructure fall into your thought processes? And obviously, we know you come out on that, Tenzin, because that's core to your work. But so you can answer that, of course. Bola and Lizette, when you think about the investments you direct people to, how can you invest in that? And then there are other things out there that I would think about, like, yes, development is a big problem for the environment. So is agriculture, and so is the fashion industry, and so is the transportation industry. So you think about those themes, how might you be able to direct investments into those, both, let's say, on the private side, the venture side, as well as on the public side?
Well, Howard, that's a fantastic question, and I'm still thinking about everything that Tenzin and Bola were just saying in the last question, because I'm thinking about the investments that we've made in sustainable agriculture in South America, and the fund that we've heard about in that was very interesting in Africa, and the work we've done with refugee communities in India. And I'm just thinking about all the different forms of capital that there are, not just financial capital, but our networks and the people that we know, and getting all the resources allocated in the right way, and just how important it is to balance that out and to get all the right voices into the conversation. And that includes all the voices we're talking about here, and also like the young people, and how wonderful it was to have Greta Thunberg speak at the UN and just shake us all up, and know that we just can't ignore these climate issues and just be a bunch of old white people in my case, and just go along in a complacent way, and that we need to solve this climate problem for all 7 billion people on the planet.
Yeah. To your question, Lizette, I completely agree with you. I think back to Howard, what you said about the green infrastructure. Green infrastructure, this is one of the few industries that I think it's been, as someone who's now in it, it's been hard to move it along because of the fact that its nature is such that it's built on internal clouds of people who have been in it for a long time. So there's very hard to disrupt this industry when you don't have a lot of capital, because you have to then buy and make sure the infrastructure is green and go beyond the LEED and WELL standards. And so for us as well, we're constantly asking ourselves, what are the types of technology we can use to make buildings green? I mean, even fusion technology, I know that not everybody may agree with it. I know there's a lot of politics in it. However, it's still a robust form of technology in terms of clean energy that we could use. And so the question is, how do we go beyond the current LEED and WELL standards and actually make sure that green infrastructure is at the bedrock of what we do?
Okay. One last question from the chat, and then you'll all have a chance to summarize your thoughts and let everybody know how you're thinking, and importantly, how they can participate in this work. And the question revolves around storytelling. We're amongst the converted, right? We live in the same echo chamber, the four of us. This is easy. It's a no-brainer to invest in agriculture that's regenerative, or to invest in green buildings, or to invest in alternative energy. But as hard as it may be to believe for some of us, not everybody buys that. You think about Lizette, the clients, you've got to have this whole big playground of fiduciary trust. How do you get the message out to the stodgy old traditional investors? And Bola, it's a little bit easier for you, and Tenzin, obviously trying to convince investors. How do you get people to really feel this viscerally and then actually act with their hard-earned dollars?
Well, here we are. Oh, sorry, Bola, go ahead.
No, I just wanted to say that it is very, very important how we communicate the story of investing in climate and impact investment. It is very, and I think what I have seen thus far that hasn't worked is the focus on the numbers and focus on just the science and expecting that that should move people. I think we should go beyond that and try to figure out, okay, where are they coming from? What's the story that will resonate with them about where do they live? How does climate change impact them in terms of where they live? And forget about all the talk about, the tons of greenhouse gas emission that they're going to be, reducing when they change their habits. Just focus on how things affect them in their day-to-day lives, and don't teach or don't go in as a professor that's trying to like tell you, okay, you don't know the answers to this. I'm telling you the answers. Just have a conversation, have a dialogue, tell a story. And I think that's the great thing about the Nature Conservancy, is that has been our approach. Even though we are a science-based organization and we believe in the data, when we go out there to act as evangelists for climate and for biodiversity, we're telling stories about people, human stories. And I think that is what resonates the most.
Okay. What we need, I guess, is to get the climate to have the same fervor that got behind GameStop, to address what I said earlier today. So we're running a little bit late. So I guess the right thing to do is maybe in the order that we started, Lizette, then Tenzin, and Bola, give everybody a parting thoughts and something motivating, something to remember.
Oh, gosh. Well, I would just agree with what Bola said, but I think it's the science plus a story. I think we need to appeal to their head and their heart. And when we do both of those two things together, it's incredibly powerful. That if we tell the story of why focusing on climate change can help people make money, because we're talking about a financial return, and then we really appeal to them with a story that together will really amplify the message, and we can change the planet for the better.
Okay, good.
I would say that for the storytelling piece, I would say that the best storytelling that I've experienced in my life is when the people who have experienced the story tell it. And so I would say, let's expand our echo chamber. Howard, as you said, the four of us are in the echo chamber. Let's expand it to people, others who may not be in it, who may not have the language or the lexicon to be able to tell their stories, but can do it through images and through other avenues. I think that's that. And then I think the last parting words is like, sometimes the investment and the trajectory of climate does not have to be so complicated. Sometimes it really could be as simple as supporting the indigenous person, as simple as supporting the person of color who has a simple solution. And I think that sometimes we try to make things complex, and in doing so, we actually are not able to solve for the problem. So I say, let's go back to the basics in climate. Let's go back to the basics in climate investment.
Great.
And I'll echo the same passing thoughts around simplicity. We just have to be very simple about what we're doing. Everybody has a role to play in this, what I consider an existential threat. And it is important. And it's, at least I'll go back to the first thing that I said about the momentum that we're having. It looks like people are talking about it. That is a positive for the environment.
Great. Well, I appreciate all your sharing your thoughts and your wisdom. And my final message to the audience is, you can do this. It's not that hard. Every time you buy something, you eat something, and you invest, you can think about the planet first. And whatever money you may save by not doing that isn't going to be worthwhile, because on a dead planet, money doesn't mean anything. So keep that in mind. And with that, on that happy note, I'll turn it over to Kathy for the concluding comments. Thank you very much, everybody.
Thank you. That was really wonderful and really inspiring to potential and current investors and activists, how to use your proxy. Very, very wonderful. And by the way, this program was recorded, the stories that addressed heart and head. And may I suggest that you go to the WISE On Demand website, where the Legacy Planning and the Impact Investing series is available and circulated to all your various networks. so that everybody on this call who's participating can find a friend in investments or in another sector of the economy and of our community to spread the word. I want to thank Howard for moderating our very activated panel, and to our terrific panelists, Bola, Tenzin, and Lizette. The urgency and the timeliness of sustainable investing and its potential in our portfolios was addressed by each of you with insight, with some predictions, with information, and most importantly, with measured judgment. I also would like to thank all the staff at Fiduciary Trust. And before closing, I want to convey my enormous appreciation to the wise Melanie Macchio and Shannon Vale, as well as our fabulous tech team, Andrew and Paulo, for literally and figuratively producing and Zooming this event almost seamlessly into your homes. We hope to welcome you in person at the Y in the near future, but until then, click into the Y's virtual stage. Stay well, stay safe, and thank you all for participating.